Hey guys. Well, first of all, I hope that everybody is still happy and healthy right now. Aside from that, I wanted to take a few minutes here and first of all wish everybody a happy yellow phase here in Erie County, and through Northwestern PA, we can finally get to doing some face-to-face real estate transactions again, and that's awesome for us, and it's awesome for our clients too. That can finally achieve that dream they're looking for. But I really just kind of wanted to make a quick video to let everybody know where things stand on a mortgage side, and what kind of expectations to set for your clients as we go forward. So if you didn't see the last video I posted, I had talked a little bit about some of the massive changes that have happened in the mortgage industry since the coronavirus has become a thing. They had increased the minimum credit scores. They had decreased the allowable debt to income ratio. They were adding reserves, a ton of overlays, things that made it a whole lot harder for people to get qualified for a mortgage. Now, your Class A borrowers, they were relatively unfazed by this, but somebody with a lesser than ideal credit score was really, I mean, I had a few that we had to halt everything until the banks ease up a bit. But I just wanted to make a video, like I said, to set a standard of expectations going forward from the mortgage side of things. The one thing I really want to point out here is that although we are now in our yellow phase, most of Pennsylvania is still in that red phase and cannot sell real estate face to face, and that's really hurting their industry. It really hurt ours. And what that means is that Pennsylvania is the only state right now where real estate transactions haven't been deemed essential. New York was the only other one, but they have since cut that tie, and they're allowed to sell real estate just as we are here in northwestern Pennsylvania in a yellow phase type atmosphere. But every other state, all 48 other states, were allowed to still do real estate transactions face to face. And because of that, just like what happens in any May, turn times on banks have increased because they're still having record breaking years. The real estate interest rates for mortgages is super low right now. It's still, high twos in some cases, but in most cases, between 3.5, some in closer to a 4. But even that, have an interest rate in 3 is ridiculous compared to the history of the interest rates. But what I wanted to do is set the standard with that. So when we stopped doing face-to-face real estate transactions, our turn times were 24 to 48 hours for most stages of the loan process. Just like what would have happened and did happen last year, the year before, come spring, those turn times increase because those banks are getting busier. That has happened still because, like I said, 48 of 50 states were still allowed to do these transactions as normal. So I just wanted to make sure that I reiterated that, because if you're setting a 30-day close and your borrower might be a less than Class A type borrower, it might need to be a 45 or even a 60-day close, depending on the situation. And I say that depending on the situation because while they have lower debt to income ratios and increased credit scores and all that kind of stuff, there are still other banks that I, fortunately, as a broker, can choose to work with that didn't have as many of those overlays get initiated during this whole thing. But those banks are probably going to have a reason for it. They're likely a less than ideal bank, somebody who's got maybe a little higher of an interest rate, maybe they cost a little more, or that they take longer to do the loan itself. So I just wanted to make a quick video, nothing more than 5 minutes here, to let you know, to set some expectations for your borrowers, for your clients, for anybody, for your sellers, that a 30-day close may not be the smartest idea. In some cases, it might be just fine. Class A borrowers, we can probably still do that, no problem. But turn times have increased because real estate has been rocking and rolling throughout the country still at a record-breaking pace. And on the borrower side of things, if you've got someone that's a buyer, maybe reiterate, as we will from the loan officer side of things, that there might be some extra steps to take. They might have a little higher of an interest rate now. They might have a little lesser of a qualifying purchase price than they would normally, but everything is still going. We're still doing just fine. We've just got to be a little more precise with how we place things and what we do to make sure that we're setting the standard. So again, I just wanted to send a 5-minute video here to let everybody know mortgage is waiting. I hope you guys have a phenomenal weekend back in our yellow phase here. I hope you've got 10 buyers that look at 10 homes and put in 10 offers. And if you need me for them, I'm here to do anything I can, even if it's just I had an agent just to help with some credit. I just want us all to get back into the swing of things. So if you need me, call me, text me, email me, hit me up on Facebook. You guys know I'm on there. You know I'm on TikTok. It doesn't matter. And yeah, have a busy weekend, a safe weekend, and hopefully a very productive weekend. And I hope to talk to you guys soon.